Hello, this is Sean Speaks with Up Talk My Life podcast, and I have another special edition. I have two fantastic guests with me today. I have attorney Eleanor Haynes. She practiced bankruptcy and taxation law in Texas. And I also have Preston Anderson, who's out of Illinois, and he is the self-proclaimed tax genie. And we're just going to talk about some pitfalls with regards to free government money and some other things that's just going on with the laws that are being promulgated in response to COVID-19. Welcome to the platform.
Thank you.
Hello.
Thanks for being here. Hello.
Yeah, thanks for inviting me.
Thank you. Thank you. Now I'm gonna give you, I just kind of did a little quick introduction, but I'm gonna give you a moment to just kind of tell my audience about yourself. So I'm gonna start with you, Preston. Tell our audience about who you are and let's just go for it.
So my name is Preston Anderson. I'm a CPA in Illinois. I'm a little different than any other CPA you've ever met. I've been in business for about, I think I started in 2004 was when my first year in practice. And over the past 5-6 years of being on my own, I've really transformed my business from prepping returns to focusing on strategy. So instead of kind of taking what you've done in the past, I look forward with all my clients and I see how we can, instead of just getting a return done and focusing on compliance, how we can help my clients not only save money in taxes, but save money in every aspect of their life. I've helped clients go from paying late fees and bounce checks to structure, just simple structures, simple changes to where they go from all those fees to none, where we've gone from massive taxes and putting more money in their pocket instead of giving more money to Uncle Sam.
Wow, now that's what I'm talking about. I love strategy. Welcome. Eleanor?
Okay, I'm Eleanor Haynes, and I'm a practicing attorney. I've been a practicing attorney over 30 plus years. I've practiced in the state of Ohio. I'm licensed in Ohio and in Texas. I've done primarily over the last probably 25 years of my practice, bankruptcy, tax, small business matters. So, and I've worked very closely with CPAs, so I'm always happy to have a CPA on the team and definitely doing some tax work, meaning as opposed to just accounting. So it's great to have you. And frankly, I call the CARES Act, which is the Corona's Aid, Relief, Economic Security Act, the Full Employment Act for bankruptcy lawyers. Okay? So when this is done, we will have jobs that will last for the next 5 to 10 years. No joke. And of course, I'm old enough and been around long enough to remember the Recovery Act of 2009 after that great recession. So been here, done that, heard this, and happy to be here with you guys today to talk about it.
Thank you. Thank you. Well, welcome. But for those of you who may not know, I'm Sean Speaks, and are they're new to the platform, and I'm also a practicing attorney here in Houston. And Eleanor Haynes and I actually office in the same office building. So we met a few years ago in the office building. So and it's very funny that you say that the CARES Act is going to basically employ bankruptcy attorneys, which, you know, when you're a bankruptcy attorney, it's like you kind of smile to that, but only in concern, because I do, the whole purpose of this particular podcast is to talk about pitfalls, right? Yeah. And although I do want to be employed as a bankruptcy attorney, right, and I want to help people, if you can take this information that you learned today and avoid it, then I've done my job too, right? So, and we've done our job. Okay, let's just dive in here. We had kind of, before I turned the cameras on, we were kind of talking about, I was telling you that, you know, in preparation for this podcast, I kind of started to, you know, my whole goal of when I decided to have this podcast with y'all, I wanted to talk about PPP and EIDL loans or grants, so that, you know, we could kind of tell people, okay, these are the things to look out for before you apply. However, these loans are all, you know, it's closed. You can't apply for them anymore. Now, I don't know if everybody's gotten approved that applied, but you cannot make an application for that anymore. Sure. All right, so before we get started, Preston.
Ask you something.
Yes,
Could you explain to our audience what the EIDL is and what the PPP is, so that they,
absolutely.
yeah.
That's why I'm about to turn it over to
Oh,
Preston,
okay.
so that Preston can explain to us, Preston, in your simplistic way, what is the PPP and what is the EIDL?
So the EIDL I call the EIDL loan. It is when it was first passed versus what is happened until yesterday is very different. When it first passed, it was supposed to be there was multiple tiers of it. There was a $10,000 advance for every business, which later they had more businesses apply. Which when you're giving away free money, it's no surprise that more businesses applied for it. So it was supposed to be a $10,000 advance for every business that applied, and it turned into $1,000 per employee, and now that money is gone. Though they are talking about potentially opening it up again and having another $250 billion, funding it with another $250 billion. But it was supposed to be a loan for up to $2 million that would be over 30 years, paid back at 3.75%. Very reasonable loan to help people through this time. And then there was also supposed to be a bridge loan to getting the PPP money, because the PPP money was not released until later. The bridge loan, basically for 99% of people that wanted it, never were able to even apply for it, let alone very few people got the advance. About half of my clients that applied for it have received it so far. About half of them are still waiting and have no idea if they're going to receive it or not. And then the payroll protection. So that's the EIDL, the EIDL loan. The PPP, or the Paycheck Protection Program, is designed to help people stay in business. It's not designed for the business owner. It's designed to keep people off of unemployment. In 1 week or in 1 day, 6 million people filed for unemployment.
Yeah.
And the PPP was designed to keep people from applying. They wanted businesses to bring back jobs and to have the business owners pay basically unemployment. Essentially, is what was going on. And so it was all about government numbers and about governments kind of puffing their chest up and looking better. They've allocated $350 billion to these two programs. And unfortunately, they ran out in 2 weeks, or about 3 weeks, when it was supposed to last 2.5 months.
Wow. Okay, so 349 billion, that's with a B, right? For the PPP.
With a B.
Okay, with the B. And then how much for the EIDL loan did they allocate?
So it's kind of hard to say, actually. I have a chart, but it's hard to say actually how much was supposed to be for the EIDL and how much was for the PPP.
Okay.
They didn't really allocate funds and differentiate between the two.
Okay. But as of today, both loans or programs are closed, meaning you can't apply as of today for either one of them.
Correct. The advance, they allocated $10 billion just to the advance, not to the additional loans in the advance. But that money is for sure gone.
Gotcha. Wow. Okay. And what were you about to say, Eleanor?
No, I was going to almost ask Preston a question, but I'll let him go ahead and finish with regard to it. Or are you ready for some questions?
I can get some questions for sure.
Well, one of the things for business, let's kind of divide this, if we could, for business versus individuals. Okay, as you said, the PPP loan is for small businesses, more focused on employees as opposed to the business itself. And the business can utilize the funds that they get under the PPP, payroll protection plan, for 75% for payroll, and then other costs like mortgage interest or rent or things of that nature.
Rent, yeah.
Right, with regard to the loan. But how is it, Preston, forgiven? How would a person who makes application go in and say, hey, I need this loan, I have employees, and I have eight employees, and here's my payroll, because I think you have to provide payroll information. So how much of that money can actually be used to pay rent versus payroll for the employees?
So 75% of the money has to be paid to the employees. And that does not include any portion of the employer besides the payroll taxes. So that all has to be covered out of pocket. 25% can be used on things like rent, utilities, interest, and only interest that was incurred on debt prior to February 15th. One of the pitfalls I see is people not doing good record keeping. So one of the things that I am highly recommending to every person that
your internet kind of went crackled a little bit. You said one of the pitfalls was that people not doing good. Did you say record keeping?
Record keeping.
Okay.
Yeah.
Okay, keep going.
A lot of business owners that I've met are great at what they do, not great at record keeping, not great at bookkeeping. And how you have these loans forgiven is the bank is going to be the one that actually forgives the loan, not the government. And you're going to want, they have an incentive to have these loans forgiven. They don't want to carry a loan 2 years at 1%. They don't want to do that. They want to have these loans forgiven. But they're going to be reimbursed by the government, and they have to have enough documentation to have it be reimbursed. And so one of the things that I'm recommending to every single client is to have a separate bank account that only is for the PPP money.
Yeah.
That way, at the end of the 8 weeks, that bank account is at zero. If it has any money left over, then that's the amount that you're going to have to pay back. And so there are very specific rules on how to have the money forgiven. You can't pay your employees less than 75% of where they were prior to February. You can't cut your overhead or your head count by more than 90%, or you have to keep at least 90% of your employees. You can't get rid of 20% of your employees. You can only give people raises up to 25%. So there are very specific regulations on how to have these loans forgiven, and that 25% is a big number across the board for basically everything. But it's only an 8-week period, which is why they're giving you an additional 25% to pay for things like your overhead, your rent, your utilities, and your mortgage interest. But you have to be very careful, because if you spend this money in such a way where you think it's going to be forgiven, and then in 8 weeks you go to the bank and you've botched it, you did something where all of a sudden half of it has to be paid back, and you're already in a position where you were struggling and this money was it's spent. I mean, that could be killer to some businesses.
So tell me this, Preston. Okay, so the 75-25, like 75% needs to be used for payroll. And then 25% can be used for other types of business expenses. If, let's say, that ratio doesn't quite work out right, only the portion that was actually used for payroll would be forgiven, or is all of it not forgiven?
So let's say you messed up and you're 5% off, and you're actually at 70% for payroll, and you spend 30% on the other stuff.
Okay.
It's not that the whole 30 is going to be then you're gonna have to pay that entire 30 back. It's more like it would be closer to the 5%. There's a calculation. I don't know the exact. It wouldn't be exactly 5%, but it's going to be closer, much closer to that 5% that you would have to pay back instead of the full.
Oh, okay. So so you only have to pay back that small percentage that you didn't use correctly on the ratio.
Yeah.
Oh, okay.
So, but if you use it for things like rent, then you're going to be kind of okay. You'll have to pay back a small percentage. But if you use it for other things like I don't know, office supplies or other commission, like other if you use it for contractors, anything you pay a contractor, that's going to you're going to have to pay that back 100%.
Okay, wait a minute, stop. So if you're a small business owner, you get that PPP loan, you cannot use that 75% for payroll is not for independent contractor pay.
Zero of it's for contractor pay.
So that's a potential pitfall, because a lot of times when you have a small business, you do utilize contractors a lot. But so do not use the PPP to pay contractors, because that portion was not going to be forgivable. You're about to say
Correct.
something, Eleanor.
Yeah, part of what I've learned so far, part of the application process, and Preston is correct, the banks are kind of, these SBA authorized banks are taking the applications and they're processing it. And in all probability, and I don't know this yet because everything is a moving target, they will be the ones who administer this whole forgiveness aspect of it. And not only the forgiveness aspects, but the ones that have to be paid back. And
Yes.
eventually, here's where I see the pitfall in this kind of lending situation, among the many things like the independent contractor versus the employee, that whole thing, and how they define it. And I think they even tried to define it in the statute and some of the regs, how they're, how you're going to be an independent contractor and what can be used for what. But the pitfall here is where you have a loan that is required, such as the example Preston used of the 5%. You have to pay this 5% back. The bank doesn't want this kind of loan on their books. So immediately I see the probability of these loans being sold to subprime types of collectors or companies that will administer it and will pursue it. And when you start, and LaShawn, both of us know as bankruptcy lawyers, how many companies, and I won't mention their names, but these are standard companies that are collectors that go after people in a scenario where they're delinquent and or they owe this debt. Because the SBA loans are gonna, I'm sure the banks are gonna get rid of them as quickly as they can so that they take full benefit of the SBA benefits that are given to them for at least administering these loans. And by the way, the banks are getting a percentage of every loan. They have it laid out, especially for the PPPs. I looked at the regs on it and I saw where banks are getting 2% at whatever amount you borrow, 1% or 0.5%, but they get paid for this. And so they're going to administer this, but up to a point, and that's a pitfall. The independent contractor analogy, many businesses are operating that way. And of course, as a CPA, Preston would have probably told you, no, you need to pay payroll taxes. No, these are employees. You probably want to pay the payrolls. And unfortunately, for many of these applications, when you apply, I know Chase Bank, and I know a number of people who have been doing with Chase, they immediately on application ask for your documentation at that moment. Before they accept your application, they want your documentation. And I don't think that was mandatory under the rules and under the statute, but that bank is requesting that. So every bank is kind of doing things their own way. And there's some pitfalls in that. There's some dangers in that.
Well, isn't it a pitfall when it's a government program, but yet the banks are controlling it, right? Because the banks are the one that makes the decision of whether or not, of how much you get. They're the one that decides whether or not you meet the testing amounts and what that amount is, right, Preston?
Yeah,
So
100%. The banks are administering it. The banks are the ones in control of forgiving it. It's like Eleanor said, it's the banks that are also getting so if it's under, I think it was $300,000, they're getting a 5% fee from the government for this. So it's not coming out of the PPP money. It's not coming out of anywhere from the person applying. It's coming, the government's paying the bank to administer the loan. That's an additional between 2 and 5%, I believe, depending on the loan amount.
Wow. Now, Eleanor, you mentioned something about, so you think it's a possibility that if the portion of the loans that are not going to be forgivable, that these banks could potentially sell them? But even if they sold them, they still would be bound by the same terms.
Well, they may be bound by the same terms, but what you have, this is a flashback to 2008, the recession. This is a flashback to what triggered. We had, the toxic securitization of mortgages, these poor, no doc, low doc loans that then were marketed on the stock market, eventually led to a worldwide problem. And here we come full circle now to this particular crisis that we're facing. And as the things that I've been reading, the recovery for 2009 was 831 billion. We're at 2 trillion and counting, okay? And so yes, I do believe that these loans will become a toxic sell to other entities who benefit. I mean, who benefit from collecting. And I'm not saying all the loans. I'm saying the ones that are trouble, the ones that cause the bank financial loss. Because not only is there financial, once they get that 5%, 2%, whatever the percentage is, they've used that with their employees, you know, taking care of it. At some point, a loan that doesn't get paid becomes a liability on the books of the bank. They want to get rid of it. And there are companies for 10 cents on the dollar that will buy that debt and begin to collect against people down the road. That's why I said this is a full employment act for bankruptcy lawyers throughout the country. We will see these loans and we will see this stuff move along over the years. I mean, I've seen it before, and this is where we are headed now. The only difference is that the debt load is bigger, and you're talking trillions of dollars. Nobody is asking the question, where the heck is this money coming from? Are we printing it?
Yes.
Are we printing it?
Just print it.
And here's the thing for the individuals. You know, we've been talking about businesses, but let's talk about individuals a little bit. You know, the ones who work at making $70,000 a year, you know, the husband and wife making $110,000 because they have two jobs, making $55,000 apiece. Okay, these are the people who are the backbone of our nation in the tax world. They're going to pay taxes. We got to pay some kind of way. The government doesn't generate money except printing it. Okay, the only people who generate money are working people. How do they get money? They tax us, and when we get taxed, we don't like it. And so what do you think is going to happen to the people who are at jobs now as we go back into our economy, back to our regular places of work? Who's going to pay for this? I don't know how much. We're still counting at least the 2 trillion that we have now, plus the deficit that we had before. How is that?
I will tell you this, you know, and I don't want to go too deep on this because I think this may be another conversation. I do think we're going to have to reconstruct sort of our whole American, you know, capitalistic democracy, right? I think that may be in the future that's going to have to be reconstructed, because you're right. You know, where's this money coming from? Well, okay, we're printing money, right? But does that means that the more money you print, the less valuable the money is. But I think that's something that's going to probably need to be reconstructed going further. But right now, the pitfall for a business or even an individual that's self-employed with regards to this government free money. I think I started talking to you all about this before I started recording, and I wanted to get your thoughts on it. I was reading, and it didn't dawn on me until I was reading, and I was like, wow, that does make sense. What if I apply for a PPP loan as a business, and I already have a loan, let's say a business loan with another bank, and without thinking about it, I apply for the PP loan, or the EIDL loan, I get approved for the loan, right? Not realizing that I have another loan, or let's say I do realize I have, because I don't know what, I'm assuming maybe you have to disclose your other loans.
Yeah, I haven't heard of too many people being able to get 2 PPP loans.
No, not two PPP loans. Okay. I'm saying a PPP loan that causes a default on a non-PPP loan that you already had.
On an EIDL loan?
On any loan, nope. This has nothing to do with COVID. Let's say I went to the bank and I had a line of credit already last year, right? And in my loan agreement, it states that I am not able to get more credit without prior lender consent.
Oh, I haven't heard a whole lot of that. I don't.
It's possible though. It's possible.
It is.
Yeah, it's possible. It's possible that as a business owner, I already have a business loan that I got in 2018, right? And that loan states that I cannot get another loan without prior consent, or it says that I cannot get another loan without, you know, it being secured by some collateral or something. Just these, because people can be very creative in loan terms. How does the interaction between the PPPs and these other non-PPP or non-EIDL loans, the interplay between that? Have we thought about that? Or am I the only one that's thinking, in a few people that I'm reading, thinking about the cross exchange between these loans that existed prior to this crisis, and the interplay with the government coming in and saying, okay, these are unsecured loans at 1% interest. But what if getting that loan violates a previous loan that I already had?
That's not something I have thought about even a little. And there are so many pitfalls with all of these different programs. And I think somebody said it best when one of the scariest things you ever want to hear is, "Hi, I'm from the government. I'm here to help."
Exactly. Right? Because it's not thought out. And this is where I'm saying the pitfall comes in it. It's not a pitfall today because nobody may be being this critical about it, right? Because we're in help mode. I want to help, I want to help, I want to help. But when the crisis somewhat subsides, right, and it's time for the loan to be forgivable, and everybody now want to make the money, right? Then I think that this is going to be some of the problems, because one bank could come in and says, okay, well, yeah, the PPP loan, the bank could say, okay, you're forgiven. But then your business loan that's not PPP or EIDL related says, okay, that loan that you got now violated this loan, right?
Well,
now you're causing new problems.
LaShawn, I think that's future litigation.
No, I do too.
What we mean about, and I do believe that some provisions, I've been reading, when the statute came out, the CARES Act, I started reading it, but of course it's voluminous and it requires continuous reading and interpretation. And it's almost a moving target. But I do believe they did discuss SBA loans, higher SBA loans, and the impact and what will happen with regard to these current loans that people are getting. And they did some waivers in the statutes for certain types of loans, but that doesn't cover everything.
It doesn't cover every loan, right?
It doesn't cover every loan, and I think that's what it's sort of like unintended consequences. This is an emergency situation, and frankly, as I know that we've both been attending these various things that the bankruptcy judges have been doing and kind of talking to us. But the reality is that the court system and ultimately people will be going through that process will consider the fact that we had an emergency. This isn't a pandemic. This is something that was emergent and we had to respond. The government may have made some errors. There are unintended consequences in this statute. There are things that the government thought they thought about, but the impact will be different than what they anticipated. Just as we're talking about a person who says, hey, I need 3 months break on my mortgage. But one mortgage company is saying, oh, at the end of that 3 months, you owe us full pay. And another company is saying, we'll put that at the back of your 30-year mortgage.
Okay? Yeah, we're gonna get to mortgages. I want to transition to that just shortly before you.
Okay, but I'm just saying that those are future.
That is a pitfall for individuals for sure.
Right. What you just raised is an unintended consequence that will come through litigation, I believe, down the road.
And I just want to make sure that I'm clear on what I'm saying, so that you understand what this potential pitfall. The potential pitfall that I think could possibly happen is that if I operate a business and I already, let's say, have a line of credit or some kind of loan with a bank, pre-COVID, right? This is like last year before last, or whatever, an already existing debt with a bank. And there's some terms in those loan documents that either preclude me from getting another loan without consent, or that ties any loans that I do get into the security interest of a previous loan, right? Let's say if the loan was a secured loan. I'm saying that it's possible that in rushing and getting these loans done, these PPPs and these EIDL loans done, a lot of diligence, or the diligence that needs to be done to make sure that this current PPP loan don't violate some other loans that the potential business owner may have, could cause a problem for the business owner, right? Because you could then cause your other loan agreement to either be in default, increase, or whatever, right? I'm saying you got, before you take this money, this PPP loan, you need to make sure it doesn't violate some other debt obligations that you may have. Does that make sense?
Yeah, and also, I'm sorry, Preston, go ahead.
No, so there was not a lot of due diligence with the PPP loan because it was 100% backed by the government. And some of the things that banks were doing were trying to, like, all right, how are you actually going to use these loans? How can we verify? So they weren't asking for a ton of documents. They were just trying to see, all right, do you have 941s from last year? And does the number you're asking for make sense? And once that they basically were able to see those like 2 or 3 things, they were issuing the loans and giving people a number, and whether or not the loan got funded in time or not, they were trying to get the loans through as quickly as possible. So there was not a whole lot of due diligence on the back end of things like that you would normally see in a loan type situation where there's a lot of due diligence, where there's a 2-week or a month process to get the loan. That was all gone. It was an emergency situation. They were trying to get money as fast as possible out of the treasury and into business owners' hands to be able to hire back those employees that all went on unemployment in March.
So does backed by the government mean private contract rights go away?
I don't think so.
Well, that's a legal question.
We're just talking now.
I don't know.
We're not giving legal advice. We're not giving tax advice. We're having a conversation.
But the statute covers a number of those issues. And if you go through the frequently asked questions or whatever, the statute, there are some provisions in the statute, the CARES Act, that does not negate a private loan, but it waives certain parts of the SBA loan, or it stands down to that private loan. Meaning, if there's a conflict, the government has taken the position, we will, and you see this throughout the statute, we will allow you to waive certain things. We will.
Okay, but that's government backed. An SBA loan is still a government backed loan. I'm talking about a per private loan, not an SBA backed loan, just a per. I walked in Wells Fargo, I had good credit, or I had a piece of land, I secured it for my business, or I got the loan. That's what I'm talking about, a per backed government loan. All right, so I think those are some pitfalls with regards to the PPP and the EIDL loan that I think businesses, if the bank is not going to take the time to do the diligence, and if the government, of course, don't have the time to do the diligence, I think as individual business owners or business owners, group business owners, you need to do the diligence before you take that money. Before you deposit that money into that bank account and start using those funds, you need to make sure that that loan doesn't interfere with terms of loans that you had prior to this COVID crisis.
Mm-hmm. Yeah, I would agree with that.
Yeah,
100%.
I just think otherwise send that check back. Send that check back. Okay, so I wanted to see whether or not we were going to, whether or not this whole situation with regards to putting the mortgage, not having to pay your mortgage for a couple of months, if we were redoing the 2008 mortgage crisis, right? And I don't know if, I'm sure y'all do recall, in 2008 with the mortgage crisis, there was this big push about loan modifications, right? Everybody was going to get a loan modification, et cetera. And I could just remember, call after call after call, talking to people who had been applying for loan modification, and the banks kept telling them, a mortgage company kept telling them, send more paperwork, we didn't get this, send more paperwork, right? And then by the time the mortgage company made a decision to say you're not going to get a loan modification, these people were 6 months to 1 year behind on their mortgage, right? And so I wanted to know, okay, now we got this CARES Act, we have this, if you have a federally backed loan, then you qualify for, I think, up to 3 months of forbearance on your loan. But I'm a big terms girl, right? What does forbearance on my loan mean, right? Because most people are going to say forbearance on my loan, I don't have to pay it. But it's bigger than that. So I contacted my mortgage company and I said, okay, explain to me what does it mean if I was to apply for a forbearance because of the CARES Act? Well, first of all, you have to find out if your loan is federally backed. So if you're federally backed, you have a right to this. So the mortgage company explained to me that I get 3 months to not have to pay my mortgage, right, under the CARES Act. And I said, okay, well, that's all great, but do the 3 months go on the back end of my mortgage? And they said, well, no, that would be considered a deferment, and deferment of the mortgage hadn't been approved for all federally backed mortgages. And we'll get to that. So I said, okay, well, how do I pay the 3 months? You know, where does the 3 months go to? They'll say, oh, well, it becomes due at the end of the 3 months. Huh?
Right.
So you're going to give me 3 months to not pay the mortgage, but then the 3 months are due at the end of the 3 months? Tax genie, where is this money coming from?
The Treasury and the Federal Reserve is just straight up printing money right now. But that money that you're talking about, it's when somebody has to, if they don't have a job right now, if they got laid off, they are out of a job and can't pay their mortgage. You can't. I mean, it doesn't make a whole lot of sense.
It doesn't. It's a pitfall.
I have friends and other accountants that are talking in ways that I've never heard accountants talk before. Accountants aren't generally the most conspiratorial of people.
Yeah.
But there are a lot of accountants that I've spoken with that are thinking that there is actually something bigger going on, which we can obviously all see, but there is something bigger in such a manner that they're actually trying to get people to foreclose, and so that they can grab these assets. Like you said before, they printed not just $2 trillion for the CARES Act, but in a week they printed $6 or $7 trillion. $4 trillion of that went basically to banks to bail out the banks.
Wow.
Because the banks were basically going to be going under. The Federal Reserve, now the Treasury currently is buying ETFs. They're buying stocks. It's never happened in the history of our country before. They're propping
I don't even know if they're legally able to or is the Treasury legally able to buy all of this securities that they're buying?
Whether they're legally able to or not, they are.
Good point.
So
Good point. They're making up rules as they go, I think.
They're making up rules as they go, no question.
But this is the pitfall for the individual. If you have a mortgage and you really can't pay your mortgage, then you got to do what you have to do. But if you have a mortgage and you can make a payment, I suggest that unless you want to fall into this pitfall 3 months later, because the options that they said was, 1, all 3 months are due immediately at the end of the 3 months. 2, you could be put on a repayment plan for those 3 months. And the repayment plan cannot exceed 6 months, so it'd be between 3 months and 6 months. Well, that's all. If you divide 3 months of mortgage divided by 6 months, that's a lot of money to be tacked onto your mortgage. And then the third option, here it goes, wait for it, loan modification. But they don't provide you, before you start your 3 month of not paying, they don't tell you what the loan modification terms could be. They don't even tell you whether or not you have to do a 3 month repayment plan or a 6 month repayment plan. The only option that secures you don't lose your house is if you have 3 months at the end of 3 months. And most people, if you're going to have 3 months worth of mortgages at the end of 3 months, that means you probably could have paid your mortgage over those 3 month period of time. So it's a pitfall. If you do not need to not pay your mortgage, you need to pay your mortgage during this crisis time. What are you about to say, Eleanor? I think
I was gonna ask Preston about this. Preston, I'm looking, and while you guys were talking, I kind of looked up the modification under the statute, the provision that provides that there should be modifications. But Preston, they also, one of the things, I was talking to one of my accounting colleagues, and they've been telling me all of these accounting rules that have been modified by the CARES Act. One of them right now I'm reading, modification to generally accepted accounting principles. Now, whenever you're doing modifications, there are two sides of this. One is the individual homeowner who has to look out to whether they're going to get the modification or not. The other side is the bank. When the bank goes to report this information on their records or their accounting. The question is this going to be a bad debt or something of that nature? And the statute, Preston, says banks will not have to recognize loan modifications related to COVID-19 as troubled debt restructurings under the CARES Act. So, and this includes forbearance arrangements, such as what you talked about with Sean, that a forbearance will allow for the payment at the end of the loan as opposed to just a modification. So the banks are being given, whoever the lender is being given freedom to do a forbearance, which would help the individual by putting that money at the back of the loan.
No. Let me correct that. The forbearance does not put the loan at the back. That's a deferment.
Yeah.
A deferment will put 3 months behind at the end of the loan. Not all federally backed loans have gotten deferment approval. Only Fannie Mae back and Freddie Mae back. And they cannot start doing that. You can't even apply for that until July the 1st.
Got it.
So for a forbearance, which is the only thing that's in place now, is that you can get a forbearance. Those forbearance payments are going to be due at the end of the forbearance period. So if you don't pay your loan for 2 months, at the end of the 3-month period, those 2-month payments are going to be due.
Okay, so the forbearance is just that time period, whatever the bank decides or the lender decides to give you.
But it's lender. Okay, not that I want to talk conspiracy, but you done piqued my interest, Preston. Not that I want to get there, but you done did it. This has given lenders, banks, financial institutions a lot of power. Or am I just, is it not a lot of power to them?
No, they've given them an absolute, they've given them a trump card. It's like, hey, you have to go through them to get the PPP. You have to go through them to get all sorts of stuff, to get the forbearance on your mortgage. They basically control, there's an old saying, if you borrow $1 million from a bank, the bank owns you. If you borrow $1 billion, you own the bank, right? And these banks literally have borrowed trillions from the Fed. So who owns who, I'm not sure anymore.
I'm not sure anymore. And I'm kind of with your accounting friends. It's like, well, do they want to own these? It's almost like they're setting the world up or America up for loss.
Yeah.
And then a transfer of ownership.
Well, we've already seen the biggest transfer of wealth in the history of humankind over the past 6 weeks. There's an old saying, you'll go decades without seeing anything happen, and then you'll go weeks where decades happen. Exactly. And since March 1st, we have absolutely seen decades happen. Yeah. There's been more change in the government, more change in different things, more transfer of wealth since March 1st. People losing fortunes, people gaining fortunes since March 1st than we've ever seen in the history of humankind.
Wow.
Okay, wait a minute. I'm on the
You're on the other side of me?
Well, I'm definitely the conspiracy kind of different, I understand it, I listen to it, but the question is, do we have the opportunity to bring, sort of like we're in some fog, and do we have the opportunity to bring clarity and some focus over the next, year or 6 months, or can we come out of this fog? That's the real question. Are we going to, I think we'll survive it, yes, but on the other side of Survivor, will they be, like you said, will there be new owners? The banks will now own assets. Why would the bank even want to own, this large volume of potentially toxic debt? Why?
I don't know. So one of the things that we're going to see, if this lasts much longer, you're going to see mom and pop shops go out of business by the droves. You're going to see hundreds of thousands of businesses go out of business. Businesses that were on shaky ground before are already closing shop. Yeah. Businesses that were doing well, but still on a month-to-month basis or had 2 to 3 months cash, they're going to be gone in 3 to 4 months. If this lasts through the summer, you're going to see all of those businesses going out of business. Yeah. Businesses that you thought were stalwarts and were strong are going to go out of business. And so one of the reports that I read, just in restaurants, if this lasts another 3 months, 110,000 restaurants will close.
Wow.
And that's just restaurants. And so if you extrapolate that to jobs, that's probably 500,000 to 1 million jobs that are poof, gone into the ether.
And we're already at what's the unemployment? 22 mil?
Well, that's just in one industry, one
That's
sector,
the
just with
application.
restaurants.
Wow.
That's the applications right now. And honestly, this is where I go to the conspiracy. Or do you think they're really giving us full disclosure on how many people are applying for jobs? Do you think we're getting full disclosure on numbers? You know, well, I'm old enough to have lived during the time of Walter Cronkite on the TV, and behind his head every day was the count of the number of dead U.S. soldiers in Vietnam. And it turns out that we had more soldiers die than the numbers that they constantly reported to us. Yeah. So we're not getting a full picture of everything. And it is getting frightening or concerning, shall I say, not frightening, but concerning. If we don't get, and maybe that's part of the reason why the president is doing his best effort to get the country back up and running, although it's extremely, in my opinion, dangerous with the condition that we have of coronavirus going around. So, you know, what do we do? That's the question. What do we do?
I don't know. The other thing it doesn't make a whole lot of sense is, from everything that I've been reading, is the numbers from the totals of deaths of corona are, oh, sorry, one second. Are the numbers from the totals of deaths from corona are basically inflated. Like, they are, if anything is remotely related to corona, even if they died in a car accident and had corona, they're listing corona on the death certificate.
I've heard that too.
It doesn't make any sense. And so
it doesn't make sense, but it does feed conspiracies.
Yeah. Yes, it does. It does. From everything that I've read, if somebody does not have a secondary issue, whether that's like my son, he's had 3 open heart surgeries, born with 6 congenital heart defects, and then he got something called acute respiratory distress syndrome, which is basically what COVID does to people. Is it gives them this acute respiratory distress syndrome, and so he almost died when he was 2 or 3. So when he was 1 or 2. So we've not left our house in 35 days because of this and because of him. If it weren't for him, I would not be taking this nearly as seriously, because people in their 30s, people that are kids, it doesn't affect kids at all. And people in their 30s and 40s, 20s, 30s and 40s, it's very, very, very mild. It's a really bad upper respiratory infection.
Yeah.
But anyway, I digress.
That's okay. That's okay. Well, I think it's like a smorgasbord of information and concern and conspiracy, and certain things fit, certain things don't make sense. That does
nothing makes sense anymore to me.
Yeah, it doesn't. Some of this stuff just doesn't make sense. But it's almost like setting the stage for the biggest wealth transfer ever.
Well, if you've been paying attention to the stock market, the day they released the numbers where 6 million people filed for unemployment, the most in the history. They released that number, and the stock market went up 6 or 7%.
Wow.
Why?
But stay with me.
Okay.
Let me just throw this in there. First of all, we have so much misinformation in the marketplace right now. Not only misinformation, lack of substantive information. Meaning, that's why when I started hearing about the CARES Act, I went directly to the act itself. Yeah. I downloaded the act and I read it, because I don't want what someone else tells me about it. I want to read it. And if that is the final signed law by the president and all the parties, then that's the thing that we need to focus on. So a lot of what we have now, with social media especially, we have people, with their opinions and views and all of that. But the question is, at the end of the conversation, what are the facts? Because the facts are not alternate facts. They are truth. And that's what we have to look for consistently, truth. And we are unable to get to the truth when we don't have access to the facts.
Well, I was just about to say, I was feeling where you were going, but I was like, okay, but what's the facts then? We can only, what's the facts?
I will tell you, with the CARES Act, the facts were a moving target. They kept changing.
Yeah, the way that they've implemented that statute is a moving target. I mean, it is what it says, but the way that they've implemented it, it's a moving target. And they're going to have to do modifications on it. Same thing, Preston, when they did the 2017 Tax Reform Act. Okay.
Oh, 100%.
You know, I mean, it's still a moving target to this day.
Yeah.
Okay. How do you interpret it? What do you do? What, you know, so it is something that and that's part of the reason why, and I'm going to say this as we probably come to close, professionals like ourselves, trained, licensed, and what we do, people need to reach out to professionals and let us help you get to the facts, because our responsibility is to know as much as we can factually. And when we don't, we say what we just said. The facts are constantly, I mean, the situation is changing.
It's changing. There are no facts.
Yeah, there are very few that we can be guaranteed are facts. Yeah.
I have one concept I want to throw out to y'all to see if you've heard about it. Universal based income.
Okay.
Have you heard about that? And is this possibly a setup for like a foundation to eventually get there?
So here's what I've heard recently.
Okay.
For anybody making less than a single person making less than $130,000, what they're proposing right now is a $2,000 per month payment.
Okay.
And so for a married couple with 3 kids, so it's $2,000 per adult and then $500 per kid under 17.
16. Oh, is it 17?
Under 16. Yeah. So it's 16 and under. Yeah. So under 17, 16 and under. So for a family of 5, and it would max out at 3 kids. So that would be $5,500 per month for between the next 6 and 12 months. I'm not 100% sure, but everybody was fighting against universal basic income, and then all of a sudden, oh hey, we have a virus, nobody can work. We're going towards UBI. It's
the thing that even whether you're Republican, whether you're Democrat, you're not as opposed to universal based income. I
personally am. I really am.
I'm not. I get that from a personal standpoint. I'm just saying it seems to be that is something that even the most extremes are coming to some slight agreement on,
for sure,
at least for a short period of time.
Yeah. Well, I mean, you look at the CARES Act and how it was passed. There was one guy who said, hey, maybe we should follow like actual procedure. And both sides were like, dude, shut up, get in line. It was one person. That was it. Nobody else opposed anything about it. And he's like, could we just follow what the Constitution says? They're like, no.
Well, but I mean, and I know Eleanor will agree with me on this one. I mean, it does look like a lot of what they're doing in response to COVID is just trampling on the Constitution, right? Just straight ignoring the Constitution. And it's just going to be interesting how this play out once this crisis subsides. Now, I do think we're heading into a new normal. Things are not going to be exactly the way they were. I don't, if you're holding your breath thinking that it's going to come back, like January 2020, it's not. Life is going to be different. People are going to operate businesses differently. Companies that normally would have 100,000 square feet worth of commercial space are not going to do that. They're going to realize the virtual world is possible, working from home, telehealth, telecourt. I had a meeting of creditors yesterday by telephone. And that saved me a half a day by doing that, because normally I would have had to drive downtown, spend time downtown, come back. So I think things are gonna be different. What do you have to say, Eleanor, about universal basic income? Preston has already said he doesn't like it. Well, but I don't know if we get a say.
Because of our tax and accounting and kind of background, I agree. I'm with Preston. I don't agree with it. How about universal health care? Okay, let's do that. Something that people can work. those who can't, we want to help them and take care of them. But people can work. And so if you want to give us something universal, how about universal health care? None of us can live without health care and without protection for our lives and for our children. So to me, I would be opposed to universal payment of every family because we don't know how they're going to spend the money. And more importantly, we need health care. That is, we need air, we need water, we need health care. These are things that we cannot control and that our government needs to be helpful and responsible for. So I would not support something like that. I would argue that that same $2,000 a month, put it towards, or $5,500, whatever the number is, you put that money towards our health care.
Well, I think it is a bill. Somebody did introduce a bill, if I'm not mistaken, about paying
premiums. Give us, yeah. I mean, and because I'm self-employed and have been for the last over 20 some years, you know, before the affordable health care, I was paying $28,000 a year for my employees. 24 of that 8 was paid for just me and my 2 kids. Just me and my 2 kids. When the Affordable Health Care Act came in, my premiums went down to $13,000 a year, just within that year. And then by the time President Obama left office, we were down to $9,000 a year. So what I'm saying to you is that, and that was imagine that $24,000 is a lot of money to pay just to maintain a health insurance plan with co-pays and you know, co-insurance and all the different things that they throw into the pot. So if they want to get serious about helping Americans and American citizens, to me, we need a universal health care, and we need a universal commitment financially to helping people pay those premiums instead of coming out of their pockets. So that's what I would say.
I hear you. I hear you. Well, the saga continues by the day. Hopefully we've addressed some pitfalls for people to just at least start to be considerate about. Don't just jump on the bandwagon of this is free money, because you might be causing yourself some issues later. Don't not pay your mortgage just because you can. You may be causing yourself some issues later. And there may be some conspiracy out there. Maybe there's this wealth transfer that's about to take place, and maybe not. We don't know. But it's some things that we don't understand. The facts are changing. The truths are changing. And I just plan to try to stay in the pulse, keep up with it, and understand it as best as I can. Thank you, Preston Anderson, for your time. Thank you, Eleanor Haynes, for your time. I will definitely put y'all's website link information in the show notes. And I just thank you.
Thank you. Thanks for having me.
Thank you. This was wonderful.
Thank you. Thank you. Happy Friday. This is Sean Speaks with Up Talk My Life. Have a happy Friday. Ashe.
All righty. Take care.